Thank you very much. Good afternoon, everyone. Very nice to see you again here. Excited of the first expo for the new year and see all my colleagues around. Very, very nice to see all of you. And I think our panel is very interesting and exactly on time based on what we saw in the last few weeks, especially in the commodity markets. So I think this will be obviously one of the main topics. But first, please, short intro for my guests today, and then we'll take it from there.
Hello, everyone. I'm Peter Plester. I'm head of B2B sales for EXNESS. EXNESS you'll see on your lanyards. We're one of the largest retail brokers in the world, and also we offer B2B liquidity to other brokers.
Hello everyone, my name is Shanu and I'm a global business manager at Mega Fusion, and I focus on the globalization of the brand and I work with the local partners around the world. Thank you.
Thank you. Hi everyone, this is Varun Srivastav. I'm heading the APAC cyber operations for UBS based out of Singapore, and yeah, look forward to contribute to the panel here. Thank you.
Thank you, guys. I was planning to start our discussion a little bit different, but based on what we saw recently, I would start our discussion a little bit different, asking you, do we actually see now, and did we use this case with the gold in the last few weeks as a real stress test on our systems in terms of risk?
It was definitely a big stress test on everybody's systems, but I think there has been an awful lot of complacency. I think people have used their time to concentrate very much on certain metrics like onboarding clients, on marketing, on very front-end measurable things, and perhaps not spending as much time as they should have done on developing their back-end systems to deal with stress testing everything properly, which is why we've seen such a widening in spreads and a deterioration in fill rates and some perhaps poor outcomes elsewhere. So yeah, I think it's a wake-up call to people that they need to do a lot more stress testing in their back-end systems operationally rather than concentrating necessarily just on front-end business development.
Yeah, definitely. I think overall in our industry, our memory is not very long exactly, but we can use this case, which is real case, very fresh, let's say, to adjust, to check our system, to adjust ourselves and to be prepared for the next one, because I'm pretty sure that these conditions at the market, maybe not with gold, but maybe with crypto, maybe with indexes, forex, can be happen very soon after this. So can we use this really as a real stress test environment and check historically what we did right, what we did wrong, and then work on this? Varun, what do you think?
Yeah, so I mean, from the stress test point of view, we see that a lot of times when organizations want to let's say publish a feature which immediately requires to be to be updated to the end customer, and they want something which is about speed to the market, then a lot of shortcuts are actually taken by our developers, by our different backend teams, as well as vendor ecosystem. And another very important part is that while we are doing that, we actually come to a point where we start accruing tech debt. We start accruing, some things which are going to be not visible now, but when there is a particular case where there's a massive overload of stress that comes on the systems, then we actually see there's a long-term impact on the overall performance of the systems, and in the end, the whole customer ecosystem actually suffers that. The whole vendor ecosystem as well as feels that. So that's where whatever shortcuts we take in order to publish something which requires minimum time to the market and overlook the key features that requires to be done as part of regular stress testing, that becomes a major pain point to be addressed. So that's where I would say that stress test is something which should be taken into consideration on a very regular basis. It should not be something which is, let's say, done on quarterly basis or something which is done on a particular periodicity, but it should be done on a very regular basis and should be intrinsic to the overall, development cycle, which is, which is very much pertinent to the overall systems as a functioning element.
Shanu, did you find some, let's say, good or bad things in your system based on this stress test environment real time? And do you think that you can use this data which you are having in the past few weeks to work on this and to improve your risk systems, to improve your, I don't know, maybe onboarding, maybe back office, maybe risk, maybe leverage, maybe communication with your liquidity providers, or maybe with your institutional or retail clients? What is your feedback?
Yeah, I think I would say, like, as we can see the recently very high fluctuation in the market. So maybe brokers should stress test on their system. They should, like, without proper risk management tools. So it's a very high potential for a broker that the risk for the broker is increased dramatically. So I think, yeah, they should keep stress testing their system for the risk management. Yeah.
Okay, and what is the reason most of the companies, we are very well established, we are working many years in this industry, a lot of talents are in the industry, risk managers, IT guys, technology, everything, but when these things are happening once per year or maybe more often, it looks like most of us, we are not really prepared for this, and we need after that start, okay, we need to do this, that, this and that, and then after 1, 2, 3 months we forgot about this, we start again pushing for the business, for the leverage, for the many things which again put us in the same situation. So why is this happening?
Again, I think the biggest message that we can gain from the last few days, couple of weeks, is about preparedness. Preparation and foresight is much cheaper, easier to try and plan for these things beforehand when you're not under stress, when people aren't screaming and shouting. You can actually properly design systems, processes that will alleviate these kind of stress, rather than when it happens, people are running around, this is not working, that's not working. Preparation is the key, definitely. And at EXNESS, we are a major player with huge numbers of clients. We do trillions of dollars of turnover every month, and we have to make sure to keep the trust of our clients that we are everything's working properly. We're making sure that systems will behave under any sort of conditions, and thankfully they did. There are obviously things that are outside of our control in the market, but internally, to keep the trust of your clients, you need to have proper planning, foresight, do proper testing, make sure that everything is, as far as you can, working as expected.
Did you communicate these conditions, market conditions, with your clients in any way?
I think so. The market open is one of the biggest issues that we see now on a Sunday evening, as the gold market opens, for example.
This is my next question about the 24/7, but
yeah. So the opening of the gold market, quite often, the actual creation of the price obviously depends on the underlying market. So as the market opens and people are risk averse, the price takes longer to form. Normally, over a couple of minutes, the price will come in and then the price will stabilize. But over the past couple of weekends, I've noticed that price takes a lot longer to stabilize. So if there is no price, it's very difficult. You can't just pick a price from nowhere. So that is one of the problems that I think everybody has been grappling with.
Yeah, that's why I was thinking about this, and I'm constantly comparing crypto with the rest of the let's say traditional finance instruments. I think everything is the same, but anyway, And during this period of time, I actually noticed that most of the traders, most of the people, most of the counterparties were more relaxed with crypto positions than in gold and silver positions, for example, because crypto is 24/7. So there is no this uncertainty, what I'm going to do with my positions on Friday. Should I reach somehow clients to increase the leverage? Should I keep more buffer for these positions? What will be Sunday, Monday opening price, etc. With the crypto, it's much easier in terms of this. So, what do you think about this? And do you think that we can? I know in the past there was some 24/7 forex pairs quoting, which were very strange to be honest. Anyway, but do you think that there is a room of improvement from this perspective, Shanu?
Yeah, I think so. Because as like Mr. Peter has mentioned that, not enough pre-planning. So for example, like expansion of technology, expansion of backup server, so which can like have a very, which can prevent them, which can prevent a broker from a cyber attacks. So a cyber, like a broker should pay attention on the technology part. Because currently, as you can see, like many brokers are just only focused on the marketing. They spend a lot of money on the marketing, and they always ignore the technology part, which is very important for them. Because if you are not up to date with the technology, so it's a very high risk, which can prone to a like DDoS, cyber attacks, this kind of situation.
Speaking about the technology, do you think that we can implement even more automation processes, protecting us from different risk, how can I say, different risk options, or we need to be very careful with the automation because some of the automation can actually increase our risk and our exposure. What do you think?
Yeah, I think like because like technology, because many brokers are, they just want to stay where they are now. They don't want to up-to-date themselves. You can say like it's a complacency. If a firm is making like a profit, so they just don't wanna improve, they don't wanna adopt a new technology, or they don't wanna work on the technology part. So yeah, which can be like very risky for a broker. And if like I would say that like if there is a room for a improvement, so they should most focus on the technology part rather than to focus just on the marketing and brand exposure.
Varun, how you want to say something?
I was going to say,
Yes,
in regulated markets like equities, you have circuit breakers. So if equity markets were to fall a certain amount, the circuit breakers would come in and people would stop trading and everyone would sort of reset, etc. But we saw, I think silver fell 38% in a very short space of time. We don't have circuit breakers. So we have to be prepared to deal with those sort of extreme conditions that perhaps other markets don't suffer from. So,
do you think some automations can help us with it? Because obviously now in these days we can have a lot of, how can I say, tools which are easily internally built because of AI capabilities, which can help us to somehow maybe monitoring, maybe speed-wise, maybe, I don't know, informative, I have no idea, some automations which can protect us and give us more, let's say, security in these situations.
well, you do have those whereby you could dynamically change your spreads, for example. Now, obviously, you don't want to widen your spreads too much, especially in a situation where your clients are under stress. That's not a good thing to do. So there needs to be a balance between protecting the service provider, the liquidity provider, and also offering a decent service to your clients who are obviously in a situation where they're relying on you, they're trusting that you're going to give them the service that they signed up for. So it's a tricky balance.
It's a very tricky balance indeed. Varun, about your automations internally, what do you think? Any additional steps in this direction, which again can help you but not increase the risk? Because maybe some automations can increase the risk if they are not properly set.
Yeah, I mean, as everybody is already aware, the buzzword is AI. So we are kind of having AI almost on every layer, and there is kind of a delusion also that is coming up where the decision maker in the boardroom and the people who are actually implementing it, there is a clear gap in what the board decision is and what is actually implementable. So a lot of times when automation happens, that leads to a lot of chaos rather than actually leading to productivity. So that's where we need to introduce concepts like continuous chaos engineering, where we should kind of identify, for example, cases where we are absolutely not estimating that it would happen in the near future, but actually it would happen. Like a lot of something about market crashes or liquidity crunch, or something which could be leading to more volatility scenario. So continuous chaos engineering will actually help us to identify that where all automation is leading to, and what all productivity elements it is actually affecting. And from there onwards, once we build a baseline of what all actually automation is bringing on the table, then basis that we can kind of work with the technologies in hand, include closed loop LLMs, build our own capabilities to identify what is there in our own environment, and bring that visibility to the top decision maker as well as the key implementers.
Sounds really good. Yeah. And now back to our main topic today. Which of the risks we, according to your knowledge and your experience, we really underestimate? The operational risk, the market risk, the regulatory risk. What do you think, Peter?
I would probably say gap risk. Again, this goes back to the whole weekend thing that you don't suffer from in Bitcoin, but the geopolitical changes that we've seen recently in the world, where the market closes on a Friday, things happen over the weekend, and where it opens on a Sunday night could be completely different, depending on where aircraft carriers are deployed in the world, etc. Who's being kidnapped or whatever. So having the correct conditions, again, pre-planning, making sure that your margin rates before a weekend are correct, making sure that your clients are properly funded, that they can fund with USDT, etc., quickly if they need to. You're not waiting for payments to travel around the world. So yeah, gap risk over the weekend, I think, has been a really big one recently.
Make a lot of sense. What about you, Shanu?
Yeah, I would say the biggest risk is in the operational part, because as I already mentioned, many branches just only focus on the technology part, and they spend a lot of money in the technology just for the automation. And there are also some other brokers, there are so many other firms who just only spend on the marketing and brand exposure. They don't even pay attention on the technology part. So I think, technology part is the most important part for the broker or a company. If you can, because if you don't have a proper risk management tool, and if you have any kind of small bugs can be a disaster for a firm if they don't pay any attention on that.
Okay, and before I ask about this 24/7, which risk we ignore according to you, Bartu?
I think it's about shadow processes in our environment. So what we actually look at on a daily basis is that everything is BAU, everything is functional, and there is no problem actually happening in the background. But a lot of times it has happened, and it has happened in a very recent cases like CrowdStrike, MoveIt, and other crashes that have happened where the persistence of threat actors continues to actually exfiltrate information, or continues to gain persistent control inside the environment, and we kind of absolutely ignore that because we feel that everything is going fine and there is no operational element which is actually making noise here. So that's where something happening in the background, like legacy systems, like shadow IT happening in the background, or even rogue LLMs. These could be the Achilles heel of our operational systems. So that's where we need to have continuous understanding of what is going on in the environment and make it like a habit of not exactly doing on a periodical basis, but continuous basis of how we can fix the system as they are on the move, rather than actually waiting for it to happen and then we come back to fixing them.
I'm really happy, by the way, about these answers and these thoughts, because if we were discuss this maybe 6 months ago, there will be different risk measure. Like, regulatory always, it's a big problem. How to onboard more clients, how to reach more clients, marketing-wise, also some technology risk with your counterparties. But now we are really discussing the heart of the business, the market. So back to my thoughts about difference between gold and Bitcoin, just simple example, and this gap risk, which is really very, very crucial these days. Do you think that we can somehow, maybe with some indexes, benchmarks or something, can allow, because recently I saw that there are some companies offering stock trading 24/7 in a way. So do you think that we can work on this in general, the whole industry, to allow clients to offset the risk, let's say, and brokerage to control a little bit better the risk, allowing trading, let's say, out of the normal trading hours?
I think the fact that brokers now, many brokers do offer Bitcoin and crypto trading over weekends, has opened up the possibility of other instruments being traded.
Yeah, I think technology-wise, we are...
And also staff-wise.
Okay.
It was a general thing that people tended not to work weekends, but once you have to start quoting Bitcoin over the weekend, then you do have a staff that are responsible for that. So in theory, I guess you could add other instruments as well. A lot of it depends on whether there's a settlement structure behind that, which is required to also operate over a weekend. So it depends on the development of systems and risk and staff, etc.
So according to you, probably it's a matter of time?
I think so, yeah.
Varun, what about your thoughts about this? Do you think that we can expect anytime soon trading gold, let's say Saturday afternoon while we are watching a football game?
I mean, we are moving in that direction. Certainly, there is a possibility. But given that financial markets happen to be heavily regulated, and we are extremely driven by compliances, and how different market forces drive the sentiments around that, drive everything around the global market. So it's pretty much colluded effort where all these different elements need to come together and take a call and make sure that if we are going in that direction, that is actually something which is not hampering any kind of stability elements. Otherwise, we are already seeing that from the crypto side, 24/7 doesn't hamper anything, but it's just a matter of time when all these different forces come together and take a combined call.
Okay. So my last question will be about, again, based on our risk approach, do you think that soon, or maybe now, we start changing our strategy, acquiring clients, offering conditions based on what we saw, and these conditions can reflect the trading in general or the conditions to the clients? Shanu?
Yeah, currently, we can see many brokers are chasing the clients, just giving them a high rebate and high commission, which can be a very risky for a broker or an employee, because they have to work in a very high pressure to chasing the clients by giving them a very high commission or high leverages, which can also affect on the LP of a broker and also as well as the broker as well. Yeah.
Varun, do you think that we will see some changes in terms of services based on what we saw recently?
It's highly unlikely. I mean, as I said, we are not an agile setup at all. The industry is not agile, right? Everything is, I mean, the smaller entities and, medium-sized entities can still take a hasty decision basis the market forces, basis the volatility or basis any kind of crashes that come through. But, if you talk about the veteran decision makers, the behemoths, the people who are actually shaping the markets, any kind of small change requires extremely large number of approvals and extremely large number of inputs from regulatory and compliance authorities. So that's where immediate shift according to these dips and different elements would actually take a lot of time rather than actually driven by events. So, I mean, in my opinion, it's something which is a long-term strategy. And if we see a lot more of this coming through, then there might be some shift in that direction. But, I mean, one or few dips won't really, I would say, affect the current service levels.
Peter, as one of the biggest retail broker, EXNESS is ready to offer the same conditions till now, which we're offering till now to your clients, or you are planning some changes based on the risk appetite?
Currently, our conditions are pretty similar to how they were before. Again, because we invest a lot of time, effort, and money into risk management to make sure that everything works properly. I think market-wise, though, there will be a shift in terms of people will look at margin rates, speed of payments, gap risk, all these things, to make sure that their conditions are properly set. I think there's been quite a lot of exuberance amongst brokers to compete on offering terms which can be a little bit crazy, that perhaps are outside of where they should be. And shocks like what happened last week help to bring those back into more of a normal situation. So again, things like regulatory risk, whereby a retail broker will offer a zero balance protection to their clients when they're actively hedging with a liquidity provider. Because they're a professional client, they're not afforded the same protection. So there is an internal risk that they need to manage and be aware of, because that could be a big constraint for them if they don't properly plan for things like that. So
yeah, definitely as a conclusion, I think that the last things that the market helping in general the industry to upgrade the risk systems, to do better risk management, and also to try meanwhile to keep the conditions even better for the clients. So guys, thank you very much for your time. Thank you for the good insights, and wish you a very nice rest of the expo.
Thank you very much.
Thank you.
Nice to be here.